What's up, guys? Welcome back to DCA. Today we're going to talk about something a little bit different. As we all know, Bitcoin is showing some weakness at the moment, trading down near $48,000. A lot of people are wondering, is this the market cycle coming to an end? What may happen from here? And if the market does drop down further, where might it go to? And I think a lot of people were caught off guard here when we were sitting at right around $57,000 and the price of Bitcoin rapidly dropped within, a 2-day time period on December 3rd and December 4th that you can see here. The price rapidly dropped from around $57,000 down to a closing price at $49,000. And I want to show you this indicator here, which explains why that wasn't so unexpected. So what we have over here is called the VPVR. So this stands for Volume Profile Visible Range. And what this indicator does is actually identifies for you over a given trading period. So, when I say a given trading period, right now we have isolated between March of 2021 over through December of 2021. Okay, and then if I, adjust the time frame that we're looking at now, we're looking between January and December. So this indicator here is showing us what quantity of volume was traded at each individual price. In other words, right here, right at around $57,000, you can see there's more volume being traded than say there was at $53,000, okay? Because the volume profile right here is rather low compared to here where you're getting this peak. So you have a peak here and a valley here. So there's a lot of volume for Bitcoin was traded right at this $57,000 level. And as a result, if we just bring this $57,000 level over to the daily chart, and let's put just a line right there, right at $57,000, you can see that this is a general level of support and resistance. We had some difficulty breaking above. When we did get above, we sort of held it as support several times until we broke below. And, the same thing holds true if we bring, the time period that we're looking at all the way out to here. So you can see that this $57,000 level has been an area of resistance, and we've been able to get above, but typically just for a short amount of time. When we are above, we try to hold it as support, but typically have a difficult time doing so. We oscillate right on this level, all right? And you see the same thing. So this is the first part of the bull market during 2021, and this is the second part. And this time we were able to more convincingly get above it and hold it as a general support level. But yet again, right at the end of November, we fell below this level, okay? The reason I'm showing you this is because, like I said, I think a lot of people were caught off guard when we had this drop here from 57K down to around 49K. But if you look at back on this monthly chart, if you look at the visible or the volume profile visible range, you see us drop from 57,000 into this gap. Once we get into this relative gap here, well, where do we fall to? We fall down to the next peak, all right? And what that means is we fall into this relatively low volume range. And when there's a relatively low volume range, what will happen? You'll fall down until you reach your next resistance level. So we fall from this level at 57K into this gap here, all right? And just to be clear, when I say a gap, I'm referring to like these regions right here, okay? And when I say a peak, I'm referring to like this region right here where you have this high quantity of volume, okay? Okay, so these peaks are called high volume nodes. And these gaps here, like we have here, these are low volume nodes or LVNs and HVNs, okay? So this area here is a low volume node. This area is a high volume node. Now notice the next high volume node occurs right in this range here, okay? So that's where we fell to. We fell from one high volume node down to the next. Now, that brings up the question of where is, the next level we may expect to fall to if we drop below where we're at right now. So you can see that pretty much we're in a high volume region down to around 46K. And if we drop below that level, it's likely that we will then extend from where we're at here sort of down to this level right here. Okay, so that just comes right across and into this low volume node. So if we get down to 46K and lose 46K, then we're probably going to drop down to our next high volume node level, which will start right at around 40K. Okay, and doesn't truly, become an area of high volume really until you get back down to around 39K. And then we have a lot of volume built up in this range here. There's a lot of volume all the way down to 30K. Okay, so another thing you can note is the 50-week moving average is sitting right here at around 47K. Okay, and we've, maintained that, going below the 50-week and getting weekly closes below the 50-week. So if we just bring up the 50-week over here on a weekly chart, we have not had any significant closes below the 50-week during this market cycle. Okay, so during this market cycle, we have essentially held this 50-week. There have been times where we've got down to it. So, this is the COVID capitulation event back here in March. We got above in May, started the bull run. We came down and held this level as support back in July. Then we came down to it, nearly tested it again in September. We did get a single close below it sort of in the, second week of December, but then quickly got above. But now we're right back at it. So, we're sitting right at this high volume node. If we drop below this, well, we've shown that in the past, it's indicated that, Bitcoin typically, what is the level it drops to when we drop below this 50-week? And that is the 200-week moving average. And, we've showed how that has happened many times when we go below this 50-week and start getting weekly closes below it, we drop down to this 200-week moving average. Okay, we've done it numerous times in the past now. So this is back in 2013 heading into 2014. We lose the 50-week down to the 200. This is 2017. We lose the 50-week down to the 200. This is 2019. COVID capitulation into 2020. We lose the 50-week down to the 200. All right. You don't want to lose the 50-week. For reference, the 200-week moving average is sitting at around close to $19,000 right now. And, typically in the past, when we've dropped below the 50-week, we don't head down to the 200 right away. It usually takes some time. In fact, a significant number of weeks. The only time, in fact, where we've dropped below and quickly got down to the 200-week was back when COVID happened. Early March, we dropped below this 50-week and headed straight down to the 200. This is kind of what we're watching right now. And if we just go ahead and remove all the drawings, you can see that. So now we're looking at a much broader profile range. So, naturally you're going to have increased volume at lower prices, right? Because people, especially day trader types, they can trade more volume if the price is lower. Okay, so when the price is 10K, you're going to have higher volumes than when the price is at 50K, for instance. It's just a natural extension. If we sort of remove some of these lower prices, we can see that, in fact, there's a lot of volume traded at the 30K level. And then once you drop below 30K, it kind of gets ugly. There's just not a lot of volume traded, there's not a lot of volume traded in the 20K range. It's not until you get down to around 23,000 where the next significant volume peak is, and then really it's at 20K. So the bottom line is, if you lose this 45K or 46K level, we're likely going to see Bitcoin rapidly head down to around 40K, and then there's a ton of volume. all the way down through 30K. And from there, if you lose that 30K level, which we held, if we just come over here, we held that level back in July. But, if you lose that level, there's a significant low volume node right here. This whole area has very low volume. Now, it's not to say you have to drop below this level, but what you typically see in these types of situations is the price rapidly falls down until it reaches its next significant support level. So you may see some support at 27K, then you're looking at 23K, for instance. So none of this has to play out like this, but I think whenever you're investing in a market, you have to know what the potential scenarios are. Now, one of the potential scenarios we could see is a bounce off of the 50 week, all right? But that's not what we're talking about here. We're talking about what is our downside potential? What should we be watching for? What are the potential outcomes that could occur if we drop below the 50? So I don't mean to be the bearer of bad news, but this is sort of what we have to watch for right now, because the bottom line is there is a lot of macro level economic uncertainty in the world right now. And at the end of the day, Bitcoin is a risk on asset. So what happens when there is macro level uncertainty in the broader markets? Risk on assets are the first ones to go out of wealthy investors' portfolios. And that's just the bottom line, guys. So you may not like it. You may disagree, and that's fine. I'm completely open to dissenting opinions, but this is sort of how I'm approaching the market right now. I'm not saying that I believe the market cycle is definitively over, but I think there's, at least things that you need to be vigilant for at the moment. There's things you need to watch out for. And this is one of the things I'm watching. I think if we drop this 46K level, you're likely going to see Bitcoin rapidly fall, heading down back to this next support level, right in here. You can see this level right where our next big high volume node is. You can see that that's right in this 40K level. So this level has acted either as support or resistance multiple times now. So that's what I'm watching for, guys. If you guys like this type of content, if you like macro level analysis of the cryptocurrency asset class, you can join us in discussion over on the Discord group. I'll put a link to that in the description below. You can also sign up for the DCA index risk model there. I've put out many videos about that. You can check that out if you're interested. It's a risk indicator which identifies where market cycle peaks and bottoms may occur for various assets, including Bitcoin and most of the top altcoins. And that's going to be it for this one. So until next time, as usual, see ya.